Google blew away Wall Street estimates last night, and the internet giant CEO Eric Schmidt expressed confidence the worst of the recession has passed and said the company has cash and it's ready to buy. For more on Google's future and really the overall tech space, Henry Blodget is with us, the CEO of Business Insider, back with us on Blodget on Bloomberg. And how'd you like that? How'd you like that sketch of you?
I just saw it. I didn't think it looked so much like me, but we'll see.
Okay, so let's talk Google first, because they came out with pretty strong results yesterday. You said very healthy, a strong report. Does that mean that, what does that tell you? Does that tell you that Google has a sound business model, having survived the crisis?
Google is rock solid. In fact, if you step back, realize that this business basically didn't exist 10 years ago. It is nothing short of extraordinary. They're now at a run rate of $10 billion of cash flow a year. This is way bigger than Time Warner, been around for 100 years and so forth. So the company is extraordinarily healthy. I still think as you go out, you got to ask, okay, where are they going to go from here with a $25 billion revenue run rate? It's going to be hard to really grow fast, but as the economy comes back, the search business is going to come back. Right now, as far as we can see, that looks great for them. And
I'm looking at a report right now that just came out from Canaccord Adams saying that they see a price target for Google at $700, driven by the reacceleration of the economy, or a reacceleration driven by improving economy, and also YouTube, as well as some other factors. I mean, that's not too far off for Google, you think?
It's not too far off. I mean, what you find as you go back 2 years, all the price targets were getting up toward 1,000 because the stock went up to 750 or very close, and then we went down to 200, and all the price targets came down to 400. So analysts are always going to follow the stock. They will try to be at the outside of reasonable, but that's perfectly reasonable. The stock right now is trading at about 15 times free cash flow. That's not cheap, but it's also not ridiculous given where Google is. So sure, if the stock market keeps going up, that sounds reasonable.
Well, Google, Eric Schmidt had basically signaled that he's ready to buy. He's got a lot of cash,
very
and he
aggressive.
Wants to deploy it. Where would they deploy it that makes most sense?
I think the two or three big business opportunities that they still have a big opportunity in video. YouTube, people have been ragging on that acquisition for years. It is now a tremendous global video platform. They're finally figuring out how to monetize it, so there are probably some acquisitions they can make there. Mobile is a big opportunity. I don't think it's as big as a lot of people think, because it's hard to imagine how you're going to have an incredible advertising medium on a tiny little screen like that.
Yeah.
But Google's Android platform is very powerful so far. Developers seem excited about it, so that's an area where they'll clearly be investing. And they are trying to go after Microsoft in the enterprise with Google Apps, and that is an area where they clearly need to invest a lot more money, because the apps are initially good. They're good for free, but if you actually want to sell them and support them, you have to build a big enterprise sales force and support force. So that's another area where they could spend a lot more money.
Which does Google have a strong hand in, or do they have to learn that?
No, not at all. And if you look at Google over the last couple of years, this is a company that for the first 7 years or so just was awash in money. And so they threw it at whatever there was to throw it at. About 2 years ago, they started to get serious and more disciplined. Some of the areas I just mentioned are actually real opportunities. But they can't just be little pet projects off in the corner. They're going to actually have to commit real capital, serious management time to them, to building them out. And there's no guarantee of success, but Google Apps, it's a cloud-based system, definitely the way the world is going. So if they want to put a lot of weight behind it, it could be big.
And as you know, a lot of these companies, media companies, have tried to get into some of the business that Google is in right now, because they're worried about being eaten up by companies like Google, including...
Too late. They've already been eaten.
Well, yeah, that's true. But print publishers, and I was talking with Ted Turner, and he said essentially that print is dead. He's talking about newspapers, magazines, and books. I mean, is there any way that publishing companies can get around, can they survive?
Oh, I think publishing companies can. I mean, you have to look at each industry and individually. The need for good reporting and good news and analysis is not going anywhere. What has been destroyed is the business model. And certainly looking out over 10 to 20 years, it's hard to come to any other conclusion other than Ted's conclusion. I mean, the idea of printing up a paper every morning and having it delivered to yesterday's news, it's just crazy in today's world. But that said, it's very generational. People over 40 still could never conceive of giving up a newspaper. You look at the New York Times, their subscription is actually holding pretty well.
Yeah.
So it's going to take a long time, but this transition is going to be tough.
Okay, Henry, thanks so much. And you know what's funny about it is that Ted doesn't even use a BlackBerry.